Hi there, good morning. You've tuned into ET now, and this is Buy Now Sell Now with me, Cheryl D'Souza. Along with me, I have Soumit Sarkar. A very good morning to you, Soumit.
Good morning.
And doesn't look that a great morning coming in for the last day, given the fact the markets have been
It's
extremely
quite volatile. In fact,
right.
from day's high, we have just seen markets dip to day's low, and again in positive territory. That's what we are looking.
Exactly. So whatever market opening that I have prepared for definitely is no use because
it's been changing continuously.
Yeah, it's been changing continuously, and as you can see it on your screen right now, we are actually trading flat with a positive bias when it comes to Nifty. It has seen a sharp recovery from the day's lowest point. About 15 minutes or so, you saw that crack in the markets, and then that sort of a recovery coming in. So yes, extremely volatile moves coming in for the benchmark indices in today's trading session. Talking about what Nifty Bank is doing, Nifty Bank is moving in tandem right now with the benchmarks. In fact, Nifty Bank is also trying to make that recovery from the day's lowest point, trading with dips about tenths of a percent or so. Talking about the advanced decline ratio, actually the picture there is pretty bleak, because if you look at the advanced decline ratio, it is very much tilted in the favor of the declines as of now. So if you look at the NSE advanced decline ratio, you have 2018 stocks that are declining as against 340 stocks that are actually gaining in trade. Similar picture coming in for BSE advanced decline ratio as well. Talking about the list of gainers, then you have HDFC Bank that is ruling the charts today. 1.8% uptick coming in for HDFC Bank. You have TCS, Aisha Motors, Infosys, Reliance, all of them lending good support to the Nifty, and that's the reason why you're seeing that the Nifty is trying to hold on to the positive territory. While on the flip side, Cipla is the top loser coming in, down about 2%. ITC is down about 1.6%. Remember that there was news that BAT was likely to sell stake, a part or small part of its stake in ITC this week itself, and BAT has actually confirmed that they are in fact exploring or evaluating possible disposal of a small part of their holding in ITC. That's the reason why ITC is down about 1.6%. SBI, Bajaj, Auto as well as Grasim are the other set of losers. Let's take a look at the sectoral indices then. Realty Index is the top sectoral loser right now. You have the broader markets. Once again, it's actually seeing a bad downtick, a 1.3% downtick coming in. For small cap, mid cap index also seeing that sort of a downtick right now. So yes, a bleak picture coming in for the markets if you look at it, Soumit, isn't it?
Well, yes, that's what we have been looking at, and I guess Vodafone Idea, in fact, what we were talking about, the stock has recovered from day's low, and that's on the back of the fact that they've actually uploaded a presentation on their website. So the commentaries that we were getting on 5G rollout and the fact that they need to increase their ARPU was coming in from the presentation, and the stock has recovered on the back of that.
All right. Yeah, actually, Vodafone Idea is recovering on back of that. And also you have a lot of now talks coming in. The fact that 300 rupees should be a sustainable ARPU level. This is what Bharti Airtel's commentary was, isn't it?
Right.
Right. So you have Vodafone Idea that is seeing a good recovery in trade today. We have Rajesh Agarwal joining us on the show. A very good morning to you, Rajesh. And Rajesh, yes, we were going to talk about the PSU banks in particular. And if you look at the PSU banking names, they are among the top sectoral loser. SBI is among the top losers on the Nifty. You may have come across the Bernstein report as well on SBI, where they've downgraded the counter. And also, in fact, PSU banks as a whole, they are not seeing some, rather they are seeing limited scope of an upside. You concur with that view?
Good morning, Cheryl. Good morning, Saumila. Yes, there is some profit booking going on in PSU banking space, because we should not forget that in the last 2 years or so, most of the stocks have more than doubled, I would say, in this space, and that's where the reason some profit booking is coming up. But as far as medium to long-term fundamentals are concerned, we believe that the story is still intact. They have strong earnings growth, cleaner balance sheet, asset quality has improved. They have cleaned up their balance sheet and higher loan to deposit ratio. They have more growth opportunities. And when we are talking of 5 trillion economy, 8 trillion economy, where PSU banking space will be one of the wheels for that growth. We have seen ROE and ROA being improved. With all sort of capex being announced by the current government, we believe that the same government is going to continue. That the capex is also going to be continued. Even private sector capex is also there. So all these things sum up, giving a view that PSU banks are going to perform in the next somebody holding for 1 or 2 years down the line. There will be short-term profit booking that should be taken an opportunity to buy.
Well, thank you for your view. Let's move on to Amit Kumar, the CEO of GR Highway Investment, the new listing on the block. Sir, congratulations on the listing of your IPO. Currently, you have a sizable portfolio of nearly 7 highway assets with stable revenue. Are you looking at acquiring new assets in the future to generate more cash flows going forward?
If you see, growth is critical for any business, and then, that is for this InvIT as well. So what we have done is, as a part of the formation transaction, right now we are taking over 7 HAM assets from GR Infra, under this InvIT's fold. But as a part of the ROFO, which is right of first offer, we have got into InvIT has rather got into a GR Infra, where InvIT will be acquiring 23 more assets, from GR, which is at the different stages of development, and InvIT will acquire as and when these assets will get completed, and maybe 1 year of that, after completion of 1 year, because as per SEBI InvIT regulation, you can take any asset into InvIT only when the it should have 1 year period of operation history. So as and when these 23 assets gets constructed and their 1 year period is there, operating history period is there, of course InvIT will acquire these assets. And we also have got into a ROFO with GR Infra, where whatever GR will develop over next 5 years, other than these 23 assets we are talking about, right, which again InvIT will have a ROFO on that. So that means, basically we are just not looking at 7 plus 23, 30 assets. We are also looking at in the next 5 years, whatever GR develops under their road segment, and InvIT will have a ROFO on that. So that is a growth path from, which we have, which is one growth path. Of course, InvIT will be looking at other third-party assets also. There are a lot of assets are available in the market right now, and we have already started exploring. And other than that, we also might as well, look to do, say, a different ROFO with some other guy, with some other contractor, other developer, so that, I can have more, longevity and my growth, intact from an InvIT perspective.
Good morning, Amit. This is Cheryl joining in the conversation, and congratulations on that listing in the bourses. Let's talk about your numbers. If you look at your revenue, they have been declining, but you have seen a significant jump when it comes to your net profit numbers. This is owing to a decrease in the subcontractor charges. Do you see this sort of a level sustainable for your profits in the near future?
See, in this HAM assets, accounting representation of it, is a little tricky. So maybe I'll just take a minute, because what happens, HAM, what happens, 40 rupees, suppose 100 rupees the project cost, NHAI authority pays you 40 rupees during construction and 60 rupees they pay you during next 15 years, which is the operation and maintenance period. So how it works is, for accounting, those are the cash flow what we are going to receive from authority, that gets classified as a financial asset. And then you charge an interest on those financial assets, which gets categorized as a revenue. So I think that is a more tricky, I would say, just from understanding perspective. If I just, break it down simple in terms of cash flow. So if I see cash flow across these 7 assets, right, which is, and if I put together the, revenue part of it, which is annuities. So across the 7 assets, the annuities what we are going to receive, in FY25, because 24 already gone. May 25 is almost 1,010 odd crores, 1,005, 1,010 odd crores. And the next year is going to be again 940, 945 odd crores. This is the 2-year period, but this is just on the basis of 7 assets what we are looking at. But if you see, because, as I just mentioned, we have a ROFO with GR. So as in when, we keep taking more assets, into InvIT, of course, your revenue will get increased, because cash flow from that particular asset will also get added.
Lastly, sir, also if you could take us through what are the other growth opportunities in the industry?
If I talk about from an InvIT perspective, maybe, and if I take this, road sector as an example, you see, over the last 7-8 years, year on year, what has been the budgetary allocation, how much NHAI has raised in their balance sheet to fund this growth. Just to give you a number, as we speak, as on date, NHAI has awarded more than 400 odd HAM projects, more than maybe it could be 420, 430, it's a number, could be the number, under HAM category. And there's a lot of, contractors across, who have bidded, who have taken, and, who have taken these projects. So now, as we spoke, like GR has 7 plus 23, 30 HAM projects. There are other guys also who have decent number of HAM projects, and because this is an industry where once you construct the project, you're done with your EPC margin, then you just stick to the project and till its maturity to maybe to get that equity margin what you would have maybe built at the time of bidding as I say equity IRR. So the what I could see there, if somebody wants to sell it and wants to use that money to again use for their EPC business, or again use to put it back into more HAM projects, which nothing but a recycling of capital, which we see as a big opportunity in this industry. So not only this ROFO with GR, I could see that there are a lot of other assets also, because see it's a 420, 430 numbers what you're talking about. You take around 150, 200, which maybe with the bigger guys, which may not want to sell, or which they want to keep it, or which they could be selling to somebody else. But still, there's a decent chunk, which is available in the market. So, the growth perspective, I don't see any challenge from an InvIT perspective, and even from a growth perspective. If you see the budgetary allocation from even this an interim budget from MORTH to Ministry of Finance to MORTH, Ministry of Roads and Transport and Highways. There's a decent allocation. That means government is committed enough to basically put money and keep growing this road portfolio, because it acts as a lever to achieve the growth target which government has set for itself.
Well, thank you, Amit, for giving us those details about the future plans of the company. GR Highway, that is, stock up to 2.5% in trade post listing. And with that, let's put a short break and we'll address more investor queries post that.
Watching Buy Now Sell Now on ET Now. Let's start taking your queries. Remember, viewers, you can write to us on the numbers that's flashing on your screen. Do remember, each time you write to us, mention your name, the stock that you're looking to invest in. Mention that name as well. If you've invested in the stock, mention the buy price, the quantity, as well as time horizon. And that way, we will be able to help, or rather, experts will be able to help you better. And talking about our experts, today we have Kunal, Bothra, as well as Rajesh Agarwal on the show. Thank you so much, Rajesh, for waiting by patiently. A very good morning to you, Kunal, and once again to you as well, Rajesh. And let's kickstart taking all the stock-related queries. Let me take this first one that is coming in from Rama. She's writing to us from London, and she's written to us on the X platform. Query is Bharat Wires rope. She's bought it at 386. Dynamic cables, I'm not sure, Kunal, if you track this one. 487 is the buy price. And the next one is Sirma SGS. The buy price is 586 rupees per share. For the 1 to 2 year view, do you think that they are good investments to stay put, or should she look to invest in an FMCG counter altogether then?
I think if you're looking to invest into a longer term theme, then I believe shifting to quality could be a good proposition at this point of time. And especially at a point when the markets are getting a lot more volatile, the mid caps and small caps seems to have run good part of the course for themselves in the last few months, and there's bound to be more fatigue into these sectors or into these indices going forward. So I think in that aspect, it could make sense to shifting towards large cap names, not particularly the FMCG pack, but I think if you can probably have few of the banking names, large cap stocks like Reliance, L&T, I think that could be a very good mixture as part of your portfolio. So I think rather than switching towards Bharat Wires and Sirma, etc., which are going through their corrective phases as of now, it makes a lot of sense to shift to large cap stocks.
Well, the next query is from Parvinder Singh from Noida, and he's looking to invest in sugar stocks. Is Dwarikesh Sugar a good bet for the next 6 to 8 months? Kunal, what would be your view here for short term?
See, I think Dwarikesh Sugar as well as many of the other stocks are going through their very sharp phases of correction over the last 3 to 6 months. I think Balrampur Chini, etc., many of the stocks have been huge underperformers in that time span. So I would believe that this correction would probably extend for another 2-3 months and possibly a potential correction of at least another 15% odd is what I would expect for Dwarikesh Sugar as well. So if in case you are a short-term investor, then it makes sense to exit the stock at current levels and look to buy back on further legs of correction.
All right, this next one is coming in from V. Murli, writing to us from Bangalore. This one is for you. Rajesh, he's asked me to ask these queries to you, but his time horizon is 1 year. So he wants to know which is the best hotel stock that he can look to invest in for a period of 1 year and expect a return of approximately 15 to 20%? Is it Indian Hotels, Charlotte Hotels, Lemon Tree, or any other counters that you can think of? And apart from that, he wants to know if Credit Access, Aavas, or 5-star, any of these are good bets to enter in for a period of 1 year.
See, as far as hotels are concerned, I think the way travel and tourism is booming, see crowd everywhere in airports or railway stations. I think hotel industry is going to do well in coming years too. Despite the fact that it has run up quite a lot in the last 2 years. Post-COVID, I would say they have given phenomenal returns. Still, we think companies like EIH, that's East India Hotels or Indian Hotels would be a good bet in this period. Maybe 15% return in the next 1 year in both of them is quite possible. As far as what were the other stocks you said?
To know if 5-star, Aavas, Financiers, or for the matter of fact, Fusion Micro are good bets.
Right. I think in the NBFC space, the better bet would be Poonawalla Finance or a Geo Financial rather than going for these companies. Or they are good companies, no doubt the balance sheet is good, they are having good business. But if we compare in the entire space, Poonawalla or a Geo is better than those companies.
Next query is from Thomas George from Kochi, and he has around 100 shares of Hitachi Energy bought at a price of 1800 rupees back in August 2021. Now, given the fact that the current prices are more than 6,500, he's asking whether should he continue to hold or book profits in this counter. He can hold for the next 1 to 2 years. Rajesh, what would be your view here for Hitachi Energy?
I think one should book profit. The numbers have not been that exciting despite the fact they have good market share. The products are good, but still the numbers have been not that good. I think it would be prudent to book at least partial profit at these levels and maybe re-enter if the stock cracks by around 15-20%. But at this point of time, partial profit booking is advised.
This one is coming all the way from Indonesia. We have Venkatesh who's writing to us, and Kunal, he wants to know 3 stocks that he can look to invest in for the long term. I'm not sure what his long term is, but if you would have to suggest a long term stock options, which one would they be?
So I would go with HDFC Bank, of course, as the first preferred bet. Given that the stock has gone through a sharp correction, it's been an underperformer and an average performer over the last 2 to 3 years. This makes the odds pretty much attractive for the stock to start performing from a longer term play. Asian Paints is the other stock which apparently has has been in the news flow as such, but I believe that the stock at sub 2,900 levels is also a very attractive proposition which you can look at current zone. Maruti is something which has a lot of potential, so it's a completely different kind of a chart. It's already trading at fresh 52-week highs for itself or closer to those levels, but it's been a very good performer in the last few months, and it looks like that the stock is coming back after almost 5 or 7 years of underperformance and breaking past about the 10,000 mark. So these are the 3 names which I prefer from the larger cap arena.
Well, the next query is from Ms. Rama from Hyderabad. Now, she has around 65 shares of ICICI Bank, and she's asking whether should she buy additional ICICI Bank shares or should she go and buy fresh stock of HDFC Bank. Rajesh, what would be your view here?
I think HDFC Bank would be a better bet if you were looking to put more money into the market. Because the fact remains that after the merger, it has become a 5th largest bank in the world. Numbers have been good. Last quarter, 30% jump in bottom line. And we feel that FY25 profit would be around 80,000 crore. On every parameter, it has performed. The only drag was NIMs, which I think going forward, once rate cuts and all are being announced in next 4 to 6 months, things would improve for longer term. A target of 1,800 odd rupees in the next 12 to 18 months is quite possible as per our research. So I think HDFC Bank is better than ICICI Bank at this point of time.
All right, so that's the view coming in on large cap private banks. But on that note, we'll slip into a break on this edition of Buy Now Sell Now. When we come back, we'll continue taking your queries. Don't go anywhere.
Back, you're watching Buy Now Sell Now. The next query is coming in from Koteshwara Rao from Hyderabad. Now he's holding 450 shares of JB Chemicals bought at a price of 705 for 7 years. So that has been a doubler for him, and around 100 shares of Affle India for 2 years, bought at a price of 970. Kunal, the query is for you. Firstly, on JB Chemicals, he wants to know at what levels can he add more, and for Affle India, he wants to know at what level should he go ahead and sell this counter.
So JB Chemicals, I would believe you should continue to hold on. You know, the stock has been an excellent performer on the longer term charts. Short term wise, if you ask me, then maybe I think closer to 1450, 1500 is a good support point for JB Chemicals. And on the upside, I think closer to 1700 could be a potential target.
All right, this next one is coming in from Neha, and this one is also for you, Kunal. He wants to know if PSU stocks like NHPC and PSU banks are still a hold for some more months. I believe she's already making profits, so she's asking whether she should stay put with them for some more months or look to book profits instead.
I think it's a good time to book out profits. If depends on how much profits you're making, and I'm assuming that you would probably have invested at the lower end of the curve for many of the PSU names. But I think it's a good proposition to book out at least partial profits, if not more, for these stocks, because these stocks are going through both a time-wise and a price-wise correction for themselves, which I believe should last for at least 2 to 3 months, if not more. So I believe that you would probably get better opportunities or better price levels to try and rebuy the stock at lower levels.
The next query is from RK Ahuja, and he's a long-term investor. Rajesh, his query is on 4 stocks. He wants to know whether should he continue to hold these counters or sell. It's Fact, JK Tires, Action Construction Equipment, and UCO Bank.
See, I think one can continue with JK Tires and UCO Bank, and the other two one should try and book some profit. The Fact and the other one can book profit. JK Tire, Action Construction, I would say. JK Tire and the other one is a hold for us.
Rajesh, coming back to you then, this one is coming in from Bisaka, who's writing to us from Kolkata, and he's a small long-term investor. He's a senior citizen. He has a time horizon of about 2 years or so is what he's saying. He has 20 shares of Tega Industries at a price of around 629 rupees per share. And the other stock is Vare Renewables, about 20 shares of that at a price of 1,411 rupees per share. He's making really healthy set of profits in both of them. He wants to know whether he should stay put with them for more 2 years or look to book out profits. And if you are advising book out profits, do you think this Protean eGov is a good company that he can look to invest in?
It's for me?
Yes, it's for you, Rajesh.
Yeah, one can continue with Tega. The company is doing very well. They supply to mainly mining companies, and the numbers have been pretty good. Order book is good. One can continue with Tega. But as far as Wari is concerned, I think it has run up quite a lot. Valuations are overstretched, I would say. At this point of time, book some profit and switch to the Protean eGov.
She's from Vidya from Chennai, and she's a short-term trader, and she's looking for fresh entry for these 2 counters, KFin Tech and CDSL. Kunal, would it be a right time to enter both the counters?
Well, KFin Tech is a bit of a high beta stock. So the stock in the last, I think if I'm not wrong, 1 month or so has corrected from 720, 740 to almost sub 600 levels where the stock is trading right now. So it's a bit of a high beta stock. So you'll have to probably keep your stop losses accordingly. But current levels could be a good point where you can look to start buying in small quantities at current levels. It looks like that the indicators are getting into a slight oversold territory for KFin Tech, and for CDSL, I think 1750 seems to be a very strong support zone. This was the point where in the month of January, when the stock had corrected, it had bounced back from 1750 to almost 2000, 2050 levels. So closer you are towards the 1750 mark could be a good risk reward play.
Okay, this one's from Gautam. He's writing to us from Mumbai. For you once again, Kunal, Himadri Speciality, 1,000 shares at a price of 354 rupees per share. He's asking whether he should stay put with this one or look to exit. He's already suffering a loss of about 10% or so in his portfolio.
Well, as of now, as I can see that the stock for the last few days has been going into a low circuit kind of a corrective phase. It's fallen very sharply in the last 4-5 days from 360, 370 to now sub 300 or just about on the verge of breaking below the 300 levels. So the concern with these kind of names is the sudden, circuit filters which the stock tends to get into. So I believe on the short-term charts, the indicators are a bit oversold. You have to wait out for a period of bounce if you're looking to exit.
The next query is from Neelam from Jaipur, and she's currently making a 20% profit on Seat, Walters and Sona Comstar, that is Sona BLW. She wants to know whether should she book profits now or hold for more. Please suggest a target, Kunal, for the next 3 to 4 months.
See, I'm bullish on Voltas, CAT on a more of a longer term basis. So I'm not sure if you can maybe hold on to these stocks for another, say 1 to 2 years. I believe that these stocks have potential to give much strong returns. In fact, Voltas I've been highlighting a buy. I think when the stock was almost at 900, 950 odd levels a few months back. So I would continue to be bullish on both of these stocks. I would suggest to hold on.
All right, I'll give you a break then, Kunal. Let me take this next query coming for Rajesh. This one's coming from Ron. He's writing to us from Mumbai, and a very tricky query he has actually, Rajesh. He wants to know whether it's advisable for him to switch out from Bajaj Finance and look to invest that money instead in an HDFC Bank and a Geo Financial. And the other one is, should he shift out of Tata Chemicals and look to put their money into Tata Tech for the long term?
The first thing first, Geo and HDFC, both are very good stock which we have been recommending to our clients since a very long period of time. Even in this show, I have recommended HDFC Bank and Geo, no doubt on that. They have huge prospects going forward. But selling Bajaj Finance and buying this doesn't make sense because on the other side, Bajaj Finance is also a very good company. So I think one should try to put some new money into Geo Financial Services and HDFC Bank rather than selling Bajaj Finance and buying them.
About from Tata Chemicals, should he look to switch to Tata Tech? Do you think that's an advisable move?
Prices have gone down a bit. That's why we are seeing profit booking in Tata Chemicals because of the Tata Sons listing story is not. They are trying to not to list the stock, and that's why we have seen some amount of profit booking in the last few days. But still, I think Tata Chemicals is a good bet for a long term. Maybe 1400, 1500 odd levels could be a minimum target going forward. Tata Tech, on the other hand, is playing on the auto story. Previously, most of the revenues were coming from Tata Group, but now they are trying to diversify. So that also is a very good stock going forward. I think 1250 to 1300 would be a decent target for them. So again, the same answer I would say: don't sell Tata Chemicals. But if you have surplus money, you can deploy to Tata Tech.
Coming in from Dilesh Joshi, and he's from Mumbai and a long-term investor. He wants to buy Castrol and M&M for long-term. Rajesh, is it a good time to buy both the counters?
It has run up quite a lot since we started recommending on your show too. I have recommended sometimes back. It was around 130, 140 odd levels, and still now it's 200 plus. But still, there is a lot of scope in this company, debt-free company, giving good dividends. Market leader in the lubricants market. They're trying to move into EV space too. So I think one can continue to hold Castrol India for a longer term horizon.
From Dasaradi, this one is for you, Kunal. He has 500 shares of Kansai Nerolac at a price of 221 rupees per share. EPL also, 400 shares at a price of 203 rupees per share. He wants to know whether he should stay put with both of these counters for the medium to long term.
Well, Kansai Nerolac, I think over the last 1-2 months from 350 levels, it's fallen very sharply towards 273 odd mark, and looks like that the stock is could probably complete its correction by maybe correcting towards the sub 250 levels. So I would believe another 10% correction could be in the offing for the stock. So if you can wait out for that last 10% or maybe another round of 10% correction, then I believe that the risk reward could be attractive, where you can even add more on the stock on the downside. EPL on the other hand seems to be a bit of a thinly traded counter, so just be wary of that. The short-term charts indicates 180 as a decent support for the stock. So I think closer to that level, 1500 as a closest support to that level. I would suggest a hold on the stock as of now.
Well, thank you, Kunal, for that. With that, let's slip into a short break and we'll address more investor queries post that.
Healthcare.
Back, you're watching Buy Now, Sell Now on ET Now, and let's try and take as many queries as we can in the last few minutes of the show. This one is coming from Narveer. He's writing to us from Hyderabad. Kunal, he wants to exit IEX. His buy price was 175 rupees per share, about 3,000 odd shares, 3,400 shares of IEX is what he purchased. He is in a huge loss. Wants to know, is there any chance of the stock making a comeback, or should he actually book out of it on losses?
See, I think the stock, the only reason concern for the stock is that it's been in the thick of so much of negative news flow over the last few months that there have been periodical rallies for the stock price, but it's not been able to convert itself into any kind of a major trend. That's the bigger concern for stock like IEX, and that's why I believe that the stock keeps on going to that phase of correction, comes back to that 130 odd mark. So I believe it all depends on the news flow. If that starts to change positive for the stock, then we may see a very strong breakout eventually for the stock. So I think it's more of a play towards the news flow. If you can hold on to the stock from a longer term play, I believe it's a good quality stock as such.
Well, the next query is from Narayana from Vizag, and he's holding around 500 shares of NMDC bought at a price of 235. He wants to know whether can he add more at present levels. Rajesh, what would be your view here from long term perspective?
Long term is very good. I think the kind of iron ore prices going up, the kind of mining industry growth we are going to witness the next 2-3 years, all goes well for NMDC. And the best part is the lagging theory of the steel has been demerged, and now it's a pure mining play. Long term horizon, it can go to about around 300 odd levels, but for adding new, I would say wait for some more correction. Maybe around 180-200 levels would be a prudent level to add.
Kunal, this one is coming from Jay Krishnan. He wants to know about Tata Investment. He's a medium-term investor. What are the charts suggesting right now for the company, and also what's your short-term target for it?
See, I think the stock is extremely overbought on on multiple timescales. In fact, on the quarterly chart, this is the 4th consecutive quarter of gains for Tata Investment, and the stock in the last 4 quarters, has rallied from 1700 to now, or I think recently the stock made a high of 9,700. So it's been a stupendous run for the stock in the last 4 quarters. RSI on the quarterly chart is 93 plus, which is extremely overbought. So I think you should stay away from such kind of names and wait out for the entire phase of correction to play out.
All right, so that's the take coming in on Tata Investment. On that note, thank you so much, Rajesh, as well as Kunal, for joining us on this edition of Buy Now, Sell Now. We are actually out of time on this edition, so thank you so much, viewers, for watching. It's a goodbye from Soumit, myself, and the team that put the show together. But in the next episode of Sundaram Mutual Presents Wealth Creators SIP Edition Nivesh Day, today we are going to unravel the debate between Lumpsum and SIP investing, providing clarity on which approach suits your investment goals better. Today on Sundaram Mutual Fund Presents Wealth Creators SIP Edition Nivesh Day, we are tackling a very common query: investing in lump sum versus SIP. I am Cheryl D'Souza. Along with me, I have Shrishti Sharma. And Shrishti, very important topic, isn't it?
Well, yes, Cheryl. So let's just break it down for our viewers who might be pondering this, Cheryl. So let's start with what's the deal with lump sum investing?
Lump sum investing is like diving in with a single larger investment amount all at once.
One-time deal. But what about SIP, Cheryl?
When you talk about SIP or systematic investment plan, which we all have been hearing about, it's all about consistency. It's investing a fixed amount regularly, sort of like a financial route.
But Cheryl, so what are the benefits of lump sum investing, if you can elaborate?
Lump sum investing actually allows investors to control when they invest in the market, and they can make the best out of market corrections. The power of compounding also works on larger amounts, and actually this can be beneficial during bull markets. But listen, Shrishti, very crucial thing that everyone should know, that it's essential to note that lump sum investing also comes with bigger risk of capital erosion due to market volatility.
But Cheryl, a question there. What are some of the funds that can one invest in, if you can name some?
Well, it's best for one to actually consult their financial advisors when it comes to investing, since fund selection depends on one's financial goals, investment horizon, and also the risk appetite.
Cheryl, and how about SIPs? Who's that ideal for?
Well, if you talk about SIPs in particular, Shrishti, it caters to anyone who's seeking a steady, disciplined approach to investing, especially people with regular income. It's like, drip feeding investments. And interesting aspect about SIP is that how they help average out investment costs over time. this enabling buyers or other investors to buy more units for the same amount when the NAV is low, and also fewer units when the NAV is high. It spreads, or rather it helps spread the risk through regular fixed investments as well.
But well, viewers, it seems that each method had its pros and cons. It's about choosing what aligns best with your goals.
Yes, absolutely. But that's all for today's discussion. Stay tuned for more financial insights right here on Sundaram Mutual presents Wealth Creators SIP Edition Nivesh Day.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Wow, Club Mahindra.
25 साल की